So here's why traders are looking for a market crash as soon as this week, possibly next week. Let's get into it here with our daily SPY analysis. Today is Tuesday, February 18th, 2025. Don't forget to give the video a thumbs up, subscribe to the channel. If you like trading content, come find me on carnivoretrades.com for swing trading alerts analysis and live day trading. It was get into it really quickly here. Housekeeping, looking at the webinar on trader psychology and discipline I'm shooting for March 3rd, Monday, March 3rd, maybe like 5 to 6 Eastern Standard Time. So it'll be 3 hours. And at the end, there'll be 30 minutes for live Q&A. If you can't make it, the recording will be available. I'll post kind of a more official update on that shortly, but that's kind of tentatively what we're shooting for right now. Also, we'll be doing the same day, we'll do a sale on Active Trader for the month. So stay tuned for that. Anyways, let's get into it here today. So there's a lot to really discuss here just as far as price action. But right now, spiders gap up sideways, little dip into 6,100, and then a pretty good surge into the end of the day. I did think we would get above 610 by end of day. I didn't think we would close above 611 though, based on where the gamma exposure was sitting for the end of the day. But right now, what am I talking about with this crash stuff? So here's why, right? Tomorrow is VIX-piration. I'm sure many of you are aware. This week is OPEX for the month of Feb. And it's kind of a known thing that you're going to get some volatility typically around this time period seasonally. And a lot of that has to do with the premium rolling off in the VIX and rolling off in stocks as we get into this period here. Couple of things though. Seeing some evidence, not really in the vol space, but in kind of just SPY evidence here that we're starting to see dealers price in a little bit upside towards 620. Now, why that's interesting is we're not even at 615 yet, and the second largest is at 615, but we're starting to see that net premium increase at 620. So that's kind of conflicting with what we're seeing in the VIX. But right now, it's getting real heavy, and it feels like, by heavy, I mean calls. And you can see here, after tomorrow, this is kind of how pretty much most of the VIX chains are starting to look here. And not really a lot of put support. It's really, dealers really exposed to the upside in calls. My guess is, and it feels right now like the market is very fearful, which is ironic because we're at all-time highs. But there's just a lot of relentless vol buying. And we've seen this before where the market front runs these events. And if nothing happens, you get a right tail event, right? There's not really a lot of hedging to the right tail. It's all to the left, essentially expecting a crash. What is that catalyst? I don't know. I mean, we take your pick. Inflation, maybe another DeepSeek will come out, tariffs, right? Trade war. So, I mean, there's a plethora of reasons. But if we cannot break, I'm just going to say 6K again, on the downside, and this window could open up as soon as tomorrow, and then really kind of extend for like a week or so. But if we can't break, I'd say like 6K, the tail could be very much to the upside, very, very violently too. So it's like the market is really expecting this volatility here, and I don't know what the basis is other than I think it's just front running personally. And you can see here just another example from Cheddar here. Just a lot of OTM call buying. March 18th, April 16th. A lot of people also kind of trying to piggyback on the 50-cent trade. I don't know. We'll see. Basically, what I'm saying here is I think right now if you're going into, and I know I've said that buy vol when it's cheap because you don't want to buy it when you have to. So it sounds like I'm double speaking here, but what I'm saying is I think if vol is cheap, that you can buy it, go for it, but treat it like a hedge. Don't treat it like a bet. So I'm not against somebody buying volatility here, especially at all-time highs. Not really a bad thing. The VIX is, it's defended that 15 level multiple times, but it's been hit a lot. And again, like I said, the market is not long puts really after like the next tomorrow and really the next week. They're very long calls, which puts dealers in a short position, which means they're going to start defending this area, this upper end of this range. So if we get a bear move, bear reaction, bear macro, whatever, and it's unsuccessful at breaking this up, the tail goes to the upside, and it's another buy the dip, which actually acts as a spring. That's one aspect of it. But that's kind of how the market's positioned right now. On the other hand, another thing I think is possible here. Now, again, there's kind of a window, right? It doesn't mean that tomorrow, if the market can't crash or something, it doesn't mean it won't have a downside pressure. In the next week or so, a lot of the time the window for expiration kind of gets extended past monthly OPEX in that cycle. So we could still go up into OPEX and then come down afterwards, perhaps. But right now, for this week, for Friday, I think we can see 620, and I don't think that a lot of market participants are really hedged for that or really thinking that's possible. The kind of general consensus I got this morning was we'll be up Tuesday, Wednesday, down Thursday, Friday, and we'll go nowhere for the week and be pinned to 6,100. I'm just starting to see that those hedges push up to 62, and we saw it at the end of the day here. Very good outside move. We broke a gamma wall here at the end of the day. So that was kind of a backdoor move. And if we look at the, just like an hourly SPX here, this is a tight, textbook pattern here. Get to the all-time high, you break it, and then you close above it, or you close a new closing all-time high at any rate. And if we look at ES as well, look at also what we did. We went into this big, I'll just here. We went into the FOMC pivot. We've hit it 1, 2, 3 times now with consolidation, a dip, and now we're right back there. So, a break above that FOMC pivot, it's a big, big level, big psychological level too. So right now, technically, market is in really good shape. Look at, I think I've shown you guys this before, but I'm going to flip over because I got a better view on trading view. But this looks like a market that wants to trend here. This is like a picture perfect cup and handle, flag breakout. It's right there, closing at fresh all-time highs. Sometimes you just need to put things aside, seasonality, OPEX, this and that, fixed seasonality, and just look at the trend here. Look at the pattern. Just because it's OPEX too doesn't mean things can't go up or down. I think a lot of people just use the OPEX term as a crutch without actually knowing where the flows are and what drives those. But you can push up into OPEX, and it's happened before. You want to know an example of that? I will show you. This period reminds me a lot of May 2023. So right here, little consolidation, pin, pop into OPEX, pull back, a little shakeout there, and then we took off. And we really didn't look back. Kind of thinking this something similar can happen here. So anyway, right now, bottom line, no problem. Wow, Microsoft really got a big bit in the. But anyway, no problems here today. Technically, this is everything you want. Nice consolidation. We've talked about the McClone on the weekly. That's starting to inch back up. If that thrusts, we're going a lot higher. But at the same time, not a terrible idea to hedge here, but I would look at it as a hedge, not a bet. A couple of other things too. 3 leading sectors today: Dow Transports, Semiconductors, and the Russell 2000. Russell 2000 up 55 basis points. That beat out every other index. So we got the trifecta. You guys know that's my risk gauge trifecta. There's small caps, transports, semis. All of them led the tape higher today. I know I'm going to get 1,000 questions about Intel. Yes, I know it's squeezing. No, my level has not changed on it. And just by the way, there's nothing saying that this isn't another lower high here, but it is squeezing. Nice move for Intel there, though. And Micron. So nice move on Micron today, too. But anyway, right now, 615 is your next up. If we can get up there, tomorrow or later this week. And then, I think that we're starting to see the interest increase at 620. QQQ, I'm still stuck with the 540 handle. And we're starting to see some interest come in at 45 and 50. You're going to need Mag 7 to wake up. Microsoft just got a nice bid towards the end of the day. It was down all day. Apple has a really good pattern, though. These guys got nice, there's an hourly pattern there. And there's also a lot of interest picking up at 150 again on NVIDIA, too. And I think that's where they want it because it's kind of on both sides. But QQQ, again, 540, still a cap. Basically went to double top today. IWM up $1.24. Dipped in the afternoon, but closed, near the highs of the day. Nothing terrible in RTY. Still coiled up here, and the weekly still looks pretty good. Nothing really wrong. Diamond up 13 cents. Nice little wedge. Still inside of that for now. SMH got close to the gap at 260, but still got a little ways to go. IGV continues to be a leader in the tech space. Look at the bid into the end of the day here. And this has been my favorite. It's been one of the better performers here, even in my portfolio. IGV up 1% here. You know, looks like it probably wants double top. Weekly, I mean, you know, retrace the 20 MA. Good pullback pattern. IGV strong. Dow Transport's closing above 16.6 again. Higher lows. I'm going to say 17. Let me just take a fib here. Yeah, say 17. There's your 618. There you go. So all round number 618. We'll leave that there so we remember for tomorrow. Now, what got left behind a little bit today was bonds. ZT came in. So the 2-year yield upticked a little bit. And, you know, it was pretty much like that across the board. ZN down and then ZB. Not broken. It's not broken, but you want to see it stay firm here and put in a higher low to this pivot. If it does that, I think this is going to curl up and surprise a lot of people to the upside. I think TLT can still go to 93. Not tomorrow, you know, not by Friday, but in time. I'm not long, by the way, just full disclosure, yet. XHB down at $1.22. This is still weak. So it's still struggling. And again, rates are weighing that down right now. VNQ, though, just hammering on this level. It's hammering. It's been hammering on it for weeks now. Maybe looking to get through that. XLF, new all-time closing high, looks like. It's positive for bulls. Banks are strong. JPM, new all-time high, new all-time closing high. Look at the surge at the end of the day. So I'm seeing a ton of fear out here, you know, in like the vol space. But, I mean, some of these areas, like, they look really good. KRE up 57 cents. ABE up 47. Broker dealers, new all-time closing high. Oil today up 1.48%. Again, totally on the 70. I don't love the pattern or hate it. It is calling out the bluff on the Ukraine de-escalation, though, for now. Oil will be getting killed if that was coming soon. We'll know. Oil will tell us first. XLE did have a good day, although it came in pretty good at the end of the day. Still kind of sloppy and not the worst pattern, though. It's trying to hold that macro higher low there. There's XOP and OIH. Similar looks there. CCJ up 1.55. Good move. So I think I talked about this last Friday. You want to see a dip down and then a close back up. That's exactly what it did. So bulls got a chance to squeeze this and make this a failed bear flag if they can follow it through. But you got to really, you know, follow it through. There's NM and MJ trying to hang on there, and then nukes holding up too. So uranium kind of a little mixed there, but that's kind of what you would want to see for bulls today. For now, nat gas, look at this, a gap down in Globex, up 7%. Weekly higher highs. Oh, this might want $5, maybe 6. When nat gas squeezes, it just doesn't look back, because this is basically a free vehicle for short sellers until it's not, and then it basically wipes everyone out. Dollar index up 22 basis points again. It held the 107 area. We'll just leave it at that for now. General bias is still kind of like retraced to 105.50, not in a straight line. Told you all about gold. Don't throw yourself off a cliff. I wrote an article on the blog about that this weekend, last Friday. Go check it out. Again, there is zero damage here. So what? It had a down day. It's going to 30.76 on the gold futures. Silver, again, yeah, went into a supply zone. It pulled back. That's what it's supposed to do. Up 1 3/4. Doesn't mean it's going to go straight up, but that's a good rebound after a good rejection. Palladium, flat, but a nice tail, platinum, and then palladium here, green. Those are still trying to put in higher low bases. And then copper here was down, but again, that's had a nice run lately. We knew that this area was resistance. Big, fat W. Inside of a smaller WV. So copper getting interesting here. What's not interesting is still Bitcoin here, but I think that this might have one more. We actually talked about this in the trading. This might have one more wick here down, but I think this is, again, it's still fine, still perfectly fine on the weekly. I think people fail to zoom out a lot, but yeah, I mean, you just went sideways and let the 20 MA catch up to price. So you're overbought here. Now you're not overbought. I just see it as big digestion. ETH, a little disappointing. Got a nice a bid there. I still think this can try for that 3K handle though. It does look like momentum's starting to turn a little bit positive here, but it needs to. I think it would need to kind of happen soon. But those spaces of the volatility has died out, so we know it's coming soon. Anyway, spiders here. There's SPX. Yeah, 6150 will probably be on deck for tomorrow. I definitely think that can get hit. But yeah, right now again, just a lot of call activity here in the VIX, and that's from the market, not dealers. So yeah, I wish I had a better explanation, but to me it just looks like front running, honestly, of seasonality, and that can turn out to be bad. So again, I think it's a good idea. It's prudent to be hedged here. I'm not, I'm net long, but I'm not like super long anymore. I've been trimming, and I think that's also a good way you can protect yourself here as well into kind of seasonally weak periods. But anyways, guys, I'll wrap it up here. Again, you guys take care. Don't forget to come find me on carnivoretrades.com. Subscribe to the channel. I'll see you guys all tomorrow.